Hey guys, I'm Ellie from Ethics Scouts. So in this video, I want to show you a very effective trading strategy that you can carry out with the moving average indicator. It's one I use all the time, and it's very good because it can be used with any instruments. It can be used with futures, Forex, cryptos, stocks, commodities, etc. It is very versatile and can be used with all sorts of different instruments, and it can be used on various different time frames. Now, the reason moving averages are such popular indicators is basically because they are part of the universal language of technical analysis. The reason they are so well respected is that traders all around the world see them and understand what they are communicating. So if you look here at my chart, you'll see prices going sideways and then suddenly it starts to squeeze up and pull away. This is exactly what I look for as an active trader. I trade volatility, so I look for things that are moving, as we all do. And as we know, the market moves in waves. So you have that first move up, you see the pullback, and this is typically where I would be a buyer. But we're missing one very important indicator on the chart. So this moving average is a very well respected level of resistance. When the price is below it, it acts as resistance. So as the price comes up, it hits that level, pulls back and hits it again a few times without breaking through. Now, if you didn't have this on your chart, you wouldn't have this context or perspective. So you might have taken a trade in this area and lost money because you missed a very clear signal. And without it, you're not trading with all the information you need. So the 200 period moving average is calculated by taking the closing price of the last 200 periods. And the term period is important because it's relative to the time frame you're looking at. For example, on a one-day chart, each candlestick represents 1 day. So a 200 period moving average represents the average closing price over the last 200 days. This long moving average is very well respected and it forms slowly over time. You then get two different types of moving averages, simple and exponential. A simple moving average calculates the average price over the last 200 closing days, while an exponential moving average weighs more recent closing prices more heavily than the older ones. An SMA actually moves more slowly and it's not as popular among active traders, though beginner traders often do use it. However, as an active trader, you want to be aware of both moving averages. So you want to be aware of the movements of the SMA and you want to be aware of the EMA on your charts. So on my chart, I use the SMA, which is the green thin line, and the EMA is the solid thick blue line. If the price runs into resistance at the SMA, it's important to be aware of it. Okay, so if you look at my chart, price is moving way above the 200 period moving average, so we don't really need to factor it in. It's not acting as immediate support or resistance. Instead, we focus on the 9 period and 20 period moving averages. These are the two that I have on my chart. So one key strategy I use is buying dips off a moving average when a pair is trading higher. Specifically, I like to buy dips off the 9 period moving average. So in a strong trend, you'll notice a pattern. It pulls back to the 9 period moving average and then it moves higher. And this happens repeatedly. When we finally break below the 9 period moving average, it may signal a change in the trend, which is something you do need to be aware of. So one of the indicators I like to use alongside the moving average is the MACD, MACD, which stands for Moving Average Convergence Divergence. And this is an oscillating indicator, as you can see in the chart right here. So the MACD works by using the 12 period moving average and the 26 period moving average, with the signal line being the 9 period moving average. If you want more information on the MACD, you can go check out our previous video. I go into full explanation of what it is and how you can use it. The MACD basically shows you when the moving averages are diverging or moving far away from each other, or when they're converging and moving closer together. When they are diverging or moving away from each other, it shows you that there is a stronger trend, and when they converge, it means that the trend is consolidating or it is about to change direction. When the two lines cross over, this usually signals a short-term reversal. So how do I use the MACD together with the two indicators? So as part of my pullback strategy, I always focus on trading when the blue MACD line is above the orange signal line. And I want to see that we're above it. So I only trade when this line is above the signal line for long trades. Now, sometimes the windows can be small and choppy, so the key to this strategy is trading when you have large, clear windows. This approach helps filter out trades during periods of consolidation and ensures that the trades are only taken when there's clear momentum in the market. So by focusing on times when the MACD is showing divergence and the histogram is green, then you can improve the accuracy of your trades and avoid potential losses during less favorable market conditions. And I found it incredibly helpful in avoiding false breakouts. Another thing you should be aware of with this strategy is sometimes you'll see price dip below the 9 EMA. Now at this point it probably would have hit my stop loss, but what I can see is that it does not sustain this move and again moves back above the 9 and 20 EMAs. So you could consider that a pullback, albeit a strong pullback, and thereafter the strategy is again valid. And you'll see that the small pullbacks to the 9 EMA and bounce off higher with divergence in the MACD. I hope you found this video helpful, and I hope it gave you a little bit more insight into how to incorporate both moving averages and the MACD in a very popular trading strategy, and one that I find works very effectively. Of course, if you have any questions, please don't hesitate to contact us. Our website is fxscouts.com, and please remember to subscribe and like.